Good afternoon, folks. This is ICT with a market review for November 8th, 2016. All right, we're looking at the dollar index. We were continuously pressing higher on the dollar as we were expecting yesterday. I noted the range between this up candle and this down candle, specifically dealing with the 97.85 level. Let's highlight that again, keep things germane. So we have this up candle and then this down candle in that range. We essentially divided the range in half, and it comes in at 98.07 rather. And I rounded it down, as I mentioned in the previous video yesterday, 98.05 and 98.010 mid level between those two price points. This would be the next upside objective, and you can see that over here on the 15-minute chart. If we get through that, the next objective would be reach the 98.30 level and then up to the 98.60, which is the opening on this up candle. And then if we get through the middle of that candle, which is sensitive because you already see this candle here, which we mentioned earlier last week as our objective for the weekly range. I'm looking for any movement above this point here. We would probably see a run above the 99.20 level and maybe even 99 mid-figure, 99.50. And it's probably going to end up hitting this thing while I'm talking to you. There's a lot of news to be following along today with the U.S. presidential election, and I've been doing that all day today. So I have no idea who's going to win, but I'm certainly interested to find out who it's going to be. So with upside objectives still in the dollar index, obviously that puts us on sell alert for continuation on the downside. Now for the euro dollar, we looked for this objective here, this up candle, which is a breaker. We want to see if there's any significantly lower prices below that level. Now we did poke its head below it here, but I do suspect we're probably going to end up rolling over that 109.90 level. If we get through 109.90, 109.65 is the next level to be mindful of. And if we lose this 109.65 level, we're going to close in this void in here, and we'll be looking for a run down into $109.45 to 109.50. And for cable, again, looking for that same level we were looking for yesterday and the day before, 123.50. We're in striking distance of it in here. Let's go into let me go back. Let me stay on the daily charts first, and then we'll break down in the smaller time frame. Now the CAD, US CAD or the Loonie, we were expecting this price to break down and trade down into the 32.90 to 32.80 level. And if we lost those levels, we would obviously look for a run down into the 31.50s to 31.20 on the downside. Intraday, we saw price trade up and give a nice turtle soup here for the the New York session. Now I'm going to teach a technique in this mentorship that I'm really wanting to talk about now, but we're going to leave it alone for now. When we talk about day trading, you'll actually see when we take trades that do not have a Judas swing. When there's a down day and there's no Judas swing, we talked about the likelihood of finding those conditions in this mentorship already, but there's a specific concept that you will learn that will help you time the market and a specific level you'll look for sensitivity, and that'll be given to you in the mentorship. So it kind of sounds like a carrot dangling in front of you, I know, but I'm probably going to edit this out, so that's probably what I'm going to do. I'm going to edit that part out. All right, so we see a real nice down day. Even after true day, dollar CAD still rolling through. And we're going to probably have a lot of momentum all through Asia tonight, again, because of the polls of what's going to most likely be viewed and who is the elect president of the United States. Let's go into the 15-minute chart for pound dollar. I'm going to show you something real quick about it. Okay, and let's zoom in. All right, so we see price is in a consolidation. in here. Price moves out of the consolidation and then trades back into the consolidation. At what point would this be a return to sell it? It's a quiz for you. Would it be this candle here? Or this candle here? Or this candle? Or this candle? It's this candle right here. Now, obviously, oh, Michael, this is hindsight. I want you to think about IPTA. Okay, we have consolidation. We have price in a consolidation. Price breaks out of the consolidation, comes back up into the consolidation. Now, as you can see, the low on this candle comes in at 124.24. The high comes in this candle at 124.24 to the pip. You can see that this was very sensitive. It was right to the pip. Can't get any better than that. Right there. But I want you to think about the big candle here. That's where it all starts. So if you're going to be looking to sell that, okay, when we learn how to do entries and such, it's going to be interesting to see. Let me put this daily chart so we can keep an eye on that too. When we see levels at which we want to trade at, the question is going to be, okay, if you expect to see price be sensitive or potentially offer a sell signal at 124.20, are you going to be permitting as much as 4 to 5 pips above it? Are you comfortable with that? And when we get into refining the entries down into 5 and 15-minute charts, what's the problem with getting short here at the 20 level? Nothing, absolutely nothing. But if it pokes through that, that's going to be problematic for some of you that want perfection. And for those that would be requiring that low here to be their sell, while it may trade there, it may not give you that actual entry. Okay, so again, we always look at the last big up candle. That's where the bulk of the selling program took place. That's where all the distribution was. They kept price up in there and then finally broke away. And then price slid, came all the way back up. Where's it trading back up into? The big candle. The last big bodied candle, it's this one here. So again, the selling will be seen on that candle's low. Right there. Yes, we only go a little bit above it. Doesn't trade all the way up into close the range. It doesn't have to. And then sells off one more time, seeking the liquidity below this low. And we're probably going to punch right through here because we have what we have. It's a triple bottom. Triple bottoms is just basically 3 bottoms that need to be picked. Okay, so it's going to be ran out below that. And just below that is our 123 mid-figure level. So we'll be watching that going through Asia tonight. And one real quick thing I want to show you for the 15-minute time frame on fiber. And then we'll wrap this video up. We saw price rally up, fall out of bed, another retracement up into the New York session, and price does in fact find a high at 110.55, and the low on this candle here, the last up one, is 110.56. So we were just 1 pip shy away from that that up candle or bearish order block. Then it went trading lower. Now again, that's why I counsel you, if you're going to see this big candle, let me zoom in so you can see a little bit better. So we have this up candle right here. Okay, so there's the low. Okay, so the low comes in at 110.56 right here, and the high comes in at 110.55. So if you were demanding 110.56 or a little bit higher up to the opening here, you would have missed that selling opportunity. So again, I like to get in there a little bit early. Okay, generally it's about 5 pips early, and allow my trade to give a little bit of a room to get short. Now, I'm not saying I did any trades today because I certainly didn't do any, but today is a perfect example. If you're going to be forcing yourself to trade in environments that have a lot of likelihood of knee-jerk price action because of, again, it's a U.S. presidential election, the willingness to see price go right to a specific level like we identify here, even though order blocks are awesome, they're great and everything else, it doesn't mean that they're going to go right to that. It can be a little bit short in terms of where the price would need to reach to. And again, that's what we teach about the wicks, because the wicks are where the retail end of trading is. So if we know this is all wick-based trading, I want to be a seller before that level gets hit. And this is a wonderful opportunity to show you why we'd like to take the sell signal if we're going to be bearish and take it a little bit early. And this is one of those opportunities where I can show you without a trade. I didn't take a trade, but the concept of why I like to get in there early, not by much, but by 5 pips or so. This is the basis, because I've seen a lot of times like this where I've expected a move to take place, but it didn't give me the entry because I was too demanding on my specific entry. So with that, guys, I wish you good luck and good trading.